Hello and welcome to the Wolf of Future Street. This video is a bit of a discussion around trend and the fact that I'm a trend trader. How do I visualize trend in my own unique way? And why do I trade trends? So, to go further onto that point on trends, I then need to also talk about reversals, because in the market there are two things that typically happen. Either the market is trending or it's reversing. Of course, people will say that there's a third element, which is what they would want to call consolidation. But in my mind, a consolidation is nothing but part of a trend. It's just a resting period for a trend that's going to start sometime soon, right? So yeah, I mean, I don't like the word consolidation, because I see that as an opportunity. So I always kind of think of prices being trending and taking breaks regularly, and that break is basically consolidation. But anyways, so basically I'm looking for trends, and the way I actually define my way of trend, or my definition of trend, is a very simple one. Here on this 15-minute chart on gold, I have a 40 EMA and I have a 200 EMA, right? And my simple explanation of what my trend is as long as the 40 EMA is lesser than the 200 EMA, then we are in a downtrend, and we are in a vigorous downtrend if price stays away from the 40 or at the 40 but doesn't even come here. We are in a strong downtrend. When we go into the 40 but we don't pierce the 200 here, we are still in trend, but we are in that resting period where price will actually either gravitate towards the 200 or will rest for some time here and then go back down. And you can see here that once we did a lot of vigorous movement, we rested, we tried to continue, then we went back into the parking space and we continued back. We went to the parking space, we continued back, we went to the parking space, and then we said, you know what, we are done with going down, we are done with parking ourselves, we want to change. And that's when the price starts going above the 200, right? And you can notice that when it tries to do this something out of the ordinary, we have a bit of volatility, which is kind of, for a lack of a better word, not with a proper direction. So big pullback down, then a big move up again, then up down, and then finally change in trend again. And whilst that was happening, you can see that the 40 EMA basically also finally then pierced the 200 EMA, right? So that's how I see trend. And then the question actually is, so before I go into that question itself, let me go back to components of the trend, right? And I had a pullback here and a continuation here. So the components of the trend are two: a pullback and a continuation. So you can see that a pullback, from the way I explained it, is pull back away from the 40 towards the 200, into that resting area, and then a continuation, a pullback again into the 40 and the 200 gap, and then a continuation. So that's a pullback and a continuation, right? And it continues to do that, continues to do pullback, sorry, pullback here, and a continuation, all of these ones. And then we change trend. So we continue to be in trend, but instead of a downtrend, we are now starting an uptrend. Then we have a downtrend, and we have an uptrend, and we have a downtrend, right? And again, this is very important to understand, because you can define your own trend your own way. My definition of this trend is this, of a trend is this: price below 40 and 40 below 200 is a downtrend. So price 40, 200. If price is below 40 and 40 is below 200, we are in a downtrend. And if price is above 40 and 40 is above 200, we are in uptrend. And once we are in a particular trend, I'm looking for pullbacks and continuations, and then I utilize these concepts to trade. And I'll come to the trading part later, but now that I've kind of re-emphasized the whole notion of a trend, the way I see it, the way I define it, and the components of trend, let me also then touch upon quickly a reversal. Now, a reversal could be all of this falling down and then identifying the bottom of this particular big move down, and then a reversal, right? And then you can say again, we reverse from here, we went down, right? And we reverse from here, we went up, and we reverse from here, we went down. Or one can say this was a reverse, this was the bottom, and we have been reversing all through, right? And then the whole idea is to be a genius or a fortune teller and nail the bottom or the top every time, right? And you can see that we would have done a bit of a reversal here, right? And then a reversal here, all of that. So unfortunately, I am not someone who can actually identify the tops and bottoms of trends or tops and bottoms of charts, and which is why I stick to what I know best and how I can define it. So the reason why I don't really look at reversals is because I'm not able to really give a proper definition of reversals the way I have a definition for trends. And I think that's the key part. As long as you can define a trend or a reversal in your own way, right, and then can utilize that definition for identifying trade opportunities, that's what you need to really focus on. So you can be a reversal trader, you can be a trend trader, but you need to define your own trend or reversal. I know that I have my own definition and it works pretty well for me, and which is why I stick to that. Now, so that's trend and reversals. I hope that I've kind of explained my view on trends and reversals, and hopefully that is digestible to most people, right? So if that hope is confirmed, then let me go to the next chapter of how do I then utilize a trend, pullback and continuation to take trades. And I think it's very important for me to really emphasize on the fact that when I actually look for a trend trade, it's important that I have a defined entry, right? there's no point in me saying that I saw something green and I entered. No, that's important, but that's not the whole story. Defined entry is really the crux of the plan that you have to trade. And then there will be a defined exit as well if possible. Unfortunately, the exits are not in our control. As long as you can actually figure out a way to exit graciously whilst making a profit, or exit by taking a small loss, that's an exit. There are places from where you can exit for sure, but I know that I can control my entry. I may not be able to control my exit every time, but every time I get into a trade, I want to control my entry. As simple as that. Now, let's go further on that point then. How do I control my entries? Now, you can see here that I have my price action charted out in terms of walls that the moving averages have created, and breaking of walls creates different colors on the candles. So when price goes below the 40, price turns red or orange in this case, and if price goes above 40, it turns green. Simple. You will also notice below that I have a MACD here. Again, one of the most abused and misunderstood indicators on the market. I think it's a fantastic indicator for any newbie trader. It's just that you will always have been misled into understanding how to use it. So I'm just going to go ahead with my understanding and my read of MACD along with my pullback and continuations. So okay, so let's then go into how do I enter a trade using these candles, the colored candles, and say for example MACD. Now you'll notice that or the rule that I have for going short is, as long as the price stays below the 200, I'm going to look at the MACD, right? And I'm going to look for something abnormal. So what does that actually mean? An abnormal in this case means a pullback. So if something is trending and it's just falling down, there's nothing wrong with it. That's what you expect it to do. But if there's a break in trend, that means there's a bit of a pullback. And the way to identify the pullback is what I have done here. So there are two ways in which I'm identifying a pullback. I'm actually identifying a pullback when price goes above the 200, above the 40, but doesn't go above the 200 for a potential short. And I see it in two forms here. The fact that in a downtrend I have green candles here, so I'm basically waiting for these candles to go orange again, which is negative or short, and I have a MACD that has gone above the zero line and can potentially go below. So those are the two abnormalities or pullbacks that I'm looking for as signs of a pullback, of a nice pullback, and then taking a trade when the MACD turns red and or the candle turns orange. And you will notice that in both those scenarios, you will see that the signals that I've got are primarily at the 40 EMA. As you can see here, the 40 EMA goes short when the MACD goes that way. You can also see here 40 EMA goes short, MACD red, right? And you can, again, price went above the 200, came down again, and then short. You go short again, right? And that's basically what I do. Now it's very important to re-emphasize the point again. I'm looking for price to stay below the 200, number one, and the candles to go green or the MACD to go green. You can say and you can argue that there is an opportunity whilst when there was a small pullback here, or actually it was a significant pullback, and MACD went up and then it broke down, right? Same thing here, MACD went up and it crossed the orange line here, right? So you can see that on both those instances we had a bit of a pullback and then it went down. The reason why I don't trade that is because I want to see a much larger pullback. That's it. That is my criteria and that's my rule. So my rule is I need to see green on a red or a short trade, right? So yeah, that's basically what I'm looking for. And then again, as a long trade, let's go to where we were trending upwards, and can the MACD show me an uptrend and an opportunity on the uptrend? So as I've shown earlier, you can see 40, 200 we are above, price is above the 40, 40 is above the 200, we are in an uptrend. Now if that's the case, I'm looking for either an orange candle or a red MACD. Sorry, actually both, right? And the entry is on the 40. When the candle turns green, MACD is green, and I want to go long. But again, here you'll see that when I don't have that clear picture, it's important to let the price do its own jugglery. So you'll notice that I don't want to enter when there is a cross of the 40 and the 200. I want the 40 to go above and then have a pullback, which is visible to the naked eye for me, right? I don't want a cross to happen, right, and then another cross to happen, and then some bit of a pullback here. I want a cross to happen, price to show me the trend, and then I'll start looking for a pullback. So that's important, and I think that's where most people also actually kind of go wrong, is because they're impatient. They don't want to wait for a trend to start. So if you now follow the rhythm of what I'm showing here, so let's see. Okay, so again you can see that, okay, let me just now take all of these things out before I go any further on the chart. So again, very interesting stuff. We had a huge down move again, but I did not get a pullback, or I did get a pullback, but I did not get that continuation further. I did not get big continuation further, right? Because MACD remained green, it did not go red at all, and now I have a long an uptrend. I'm looking for a pullback and a continuation. So again, let's see, did we get it? No, we did not. So, and that's the rule that I have, and that's the rule that I follow. Now, so basically what it meant was there was this big down move that I would have missed. I'm happy to do that. If gold was not working for me during this day, I would have looked at some other ticker and I would have traded that. Here again we have an up move. I did not get any pullback that was worth noticing on the indicator and the candles, and I did not get any trade here, right? Then let's keep going further. Then we have another down move here, a downtrend, right? We have a cross again of the 40, so that indicates a move, down move or a downtrend. So now I'm looking for a pullback. So we have a down move, we have green candles finally, and then we have price crossing 40 and MACD crossing. Of course this would have been a small trade, and obviously this is actually very early pre-market hours, so they actually are not worth trading at this time. But as an example, you can see what I was trying to show. Again, pullback for a continuation down and MACD down. So all of that actually happened. So entry clearly on the 40, waiting for green candles on a downtrend for a continuation. So green candles are pullbacks and the orange candles are continuations on a down move. Yeah, so I hope that you have seen this explanation of a trend, pullbacks and continuations and reversals, and uh, visualizing a trend based on your definitions. I have my own definition of a trend, and I have a definition of how do I want to see that trend play out from a trade perspective through pullbacks and continuations. I have a definition of what I mean by a pullback, and I have a definition of where do I want to enter in a continuation. Yeah, I thought I'll explain this because I don't see this kind of details around on the internet, YouTube, or any other source, and I thought it was important for me to put this out. Alright, thank you, bye bye.